Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, February 11th, 2020. Here are our top stories. It's tax season and tax scam season and Disney Plus's unintended consequences. Well, let's welcome back to the program Dan Klein, Senior Technology Consumer Products Reporter with The Motley Fool. Dan, so great to see you. Welcome back to the program.
Thanks for having me back.
So, well, it's great to see you. Lots of things going on in tech. Let's talk first about potential tax scams. What can you tell us there?
Well, there's two types of tax scams out there. The first is, let's call it a passive scam. This is where someone gets a hold of your Social Security number and files a tax return on your behalf, but of course with their address or their bank account to get your refund. And I know what this is like because this happened to my wife and I maybe 4 years ago. I pretty late in the tax season, maybe like April 13th, filed my taxes. I'm kind of a complicated tax situation. At the time, I was splitting my time between two states. I have multiple clients. I'm a freelancer. I mean, you know all of these issues. So it takes a while to get it all together. And when I went to hit send on the tax program I use, it said, you can't send it. You've already submitted your taxes. And I called them up and I said, what does this mean? And they say, well, clearly someone has filed under your Social Security number. When that happens, you have to go to the police. You don't have to, but it's better if you go to the police. You get a police report on this. It takes not a long time, at least in my small town it didn't. You then have to hand file a form with the IRS saying what happened, and your taxes, you have to print them out and do them on a paper basis. None of this is overly complicated. The problem is it holds up your refund for 6 to 8 months while they sort through this. And in our case, it was kind of funny because the person who defrauded us input their bank account wrong, so they'd actually used our address on their fake tax form. We got a refund check made out in our name that, of course, we weren't entitled to. If this ever happens to you, do not deposit said refund check. This is not your money. This is a mistake by the IRS. So you have to alert the IRS that this happened. And I think in our case, we did it through an accountant, and the check just ended up getting destroyed. Like, I don't think you actually had to mail it back. But don't deposit the money. That is theft. You are not entitled to a tax refund just because somebody else filed taxes on your behalf.
Yeah, and based on false information, Dan. I mean, I know you want to talk about the other type of scam, but real quick, how do you prevent something like this? Or can you prevent something like this? Someone files on your Social Security information.
You can lock your Social Security number, but the reality is anything you can do to prevent this creates all sorts of other hassles. So one of the biggest things you could do is file quickly. File before the fraudulent people do, because the fraudulent people aren't going to try to prove that they're the real people. That's not, of course, a great system. The reality is, as long as we have issues where our Social Security numbers and other personal information is being made available publicly to criminals, you're going to have situations like this. And all you can be is vigilant in that file your taxes as soon as you can. And if you see that this has happened, take the steps needed. It's another reason why I am a big believer in not getting a big tax refund. Because what happens to you if you're in one of these situations where you were counting on $4,000, $5,000, $6,000 and all of a sudden it gets delayed by 8 months? Take that money as you earn it and sort of, work with an accountant, work with someone in your HR department to figure out what your proper deduction should be so you're not overpaying.
Dan, that's great. Dan, that's great advice. I think about Equifax, Target, Marriott. So data is certainly out there. I mean, you have to protect it. You have to be vigilant. But what is the Internal Revenue Service? What is Quicken, Intuit, and other filing firms doing to kind of prevent this? Can they do anything to kind of validate who you are? Or is it just really is the solution is get your information there and submit your refund as quickly as possible. Is that the solution?
Well, the IRS is woefully underfunded. But as a consumer, as a taxpayer, it's a very mixed feeling about whether you want the IRS to be better funded. In some ways, you want them better funded on things like this, protecting my identity. But do you want the IRS to start nitpicking you because you made a purchase in one state, no sales tax on it, but didn't pay it? I mean, I went through an issue. My house was my brother's legal address for about 6 months while he was in between jobs. And he paid alimony, and he actually used Venmo to pay his alimony. And the IRS did a paper audit of him. And I was opening his mail for 6 months. So I saw this and it said, hey, you claimed whatever it is, and it was like $17,000. We accept this part of your alimony, but this part, we don't see any record that you paid it. So he then went in and had his accountant. My brother makes a lot more money than I do, so he has a big time accountant. And he had his accountant send, here's the record, here's what I sent. And the IRS actually asked for the direct Venmo screenshots to show that he did this. It wasn't overly scary, though it's never fun to open your mailbox and see the IRS envelope, and took a second to realize it didn't have my name on it. But it was a pain. So as consumers, do we want the IRS to be funded so well that it can really go after nitpicky stuff? I don't think we do. But I think we do want the IRS funded so it can protect our identity and go after wide-scale fraud. The corporation that's underpaid by a huge amount is probably getting away with it right now based on the very limited number of audits being done.
Dan, cybersecurity, big issue. We've talked about it here. We've talked about it with other contributors. I mean, the federal government has some responsibility here. And I know I sent you an article that I read in Roll Call about the Congress taking up various aspects of this. I mean, it's good to see Congress doing work, but I mean, is this something that we can hope that the passage of legislation or regulation can actually prevent this? I mean, I know that there's a mixed bag here in terms of the Internal Revenue Service, but do we need some level of cyber crimes division of the federal government?
Here's the thing, we do, and I think this is a failure of both the Congress and the executive unit, and it's a function of age. If you watch the hearings when they had executives from Facebook and Google and other people in, the people making these decisions are not people who are well versed in modern technology. So a 25-year-old hacker is always going to be 5 steps ahead of Congress. Yeah. Should this be a branch of the U.S. government, a function just like we have the CIA and the FBI? It probably should be. But you literally have people that barely know how to like something on Facebook making these decisions. And there's a true lack of understanding of how technology works. So that is a big disconnect and a big problem. There's also an adversarial relationship currently between both parties, really, and big technology. There are calls to regulate on the Republican side, calls to break up Google and Facebook and other companies coming from Democrats. So if you're Google and Facebook, I don't think you have a lot of incentive to say, hey, here's these tools we created. Why doesn't the IRS also use them? Here they are, take them free of charge. So this is going to be a big problem. But I think we should also talk about the second type of scam.
Okay, we've got about 2 minutes left, so why don't we do that?
So let's just be very clear. If the IRS wants to talk to you, they send you a letter. That is the only scenario. The letter comes, it has a big clear window. It says Department of Internal Revenue Service. It's very obvious. It comes with a guide to taxpayers' rights every single time. So there are people getting fraudulent letters, but those should be pretty easy to spot because there's a lot, in the IRS, if you have to, could verify whether they contacted you if you call them. But if the phone rings or you get an email threatening, if you don't pay up, this is going to happen, the IRS never initiates a phone call to you. They never email you. If the IRS has to do anything other than sending you a letter, it probably involves the police, and you will know it's real. So any scam, if someone purporting to be your bank calls you and asks for information that the bank should clearly have, like your social security number or your account number, hang up the phone and call your bank and ask, hey, I just got a call saying there was an issue on my account. Same thing with the IRS, except if it's a phone call from the IRS, you know it isn't real. And it's also important to note, that the IRS only wants to be paid properly through U.S. currency. If the IRS is asking you for iTunes gift cards, the IRS isn't handing out Red Lobster gift cards to its employees.
Yeah.
They want to be through traditional methods.
Yeah.
So anything that isn't a letter telling you what the issue is, which will usually give you 30 days to answer, and most letters from the IRS, as terrifying as they are minor things. You put 500 and the number was 5,000 and you owe an extra $200 or whatever it is. That most audits are paper audits where it's just, we think you made a mistake, either provide proof that you didn't or answer the mistake here.
Yeah, Dan, good advice. And I would argue that Congress is not 5 steps behind. They're 35 steps behind when it comes to technology. We're going to take a quick break. We're going to come back with Dan. We're going to talk a little Disney and some unintended consequences of their very powerful streaming service. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. We're talking to Dan Klein, Senior Technology and Consumer Products Reporter with The Motley Fool. Dan, thanks so much for sticking around this morning.
Thanks for keeping me.
So Dan, we do have a choice, but we don't have a choice because you're really great and you're very insightful. So let's just jump right in. Disney streaming service has been a raging success. I think everyone would agree, and I don't think have all the numbers. Maybe you have more numbers than we do, but there are some unintended consequences to the success that Disney is having on the streaming side.
Yeah, it's being reported that way, and stock analysts are acting that way. And I think one of the things that happens is when people read a quarterly earnings call or dig through the numbers a company reports, they look at the positives, but they look at the negatives, and they do it on a very short-term basis. Mm-hmm. So on the positive side, Disney Plus has, I think the number is 28.6 million subscribers. It's well on its way to 30 million subscribers. It's had limited churn, and I think that's very impressive because in my mind, other than young families who the whole Disney catalog is valuable, Disney Plus is basically The Mandalorian. Like, so far, that's all they've had of a notable new series. And you have to wait until the summer before you get the first of the Marvel series, and next year before you get more Mandalorian. So the fact that the catalog is driving that many subscribers is impressive. But the negative people are pulling out is how quickly Disney is losing customers on the linear cable side, ESPN being the big one. As people cut the cord, and cord cutting has dramatically accelerated, they are losing ESPN. And some of the streaming services, Sling TV has ESPN. There are ways to get ESPN in a streaming fashion, but you're not forced to get it the way you are with cable. So some analysts are saying, see, look, Disney's losing. My argument would be Disney saw the future. They knew this was going to happen. They built out a streaming service. And when it's appropriate to make ESPN an add-on to its streaming service, they will negotiate the rights to do that.
Yeah.
Right now they have ESPN Plus, which is a separate package of shows, largely because Disney doesn't have the digital rights to show, say, college football or Major League Baseball or the other things that it can show you on regular cable ESPN. So I think it's going to be lumpy for Disney. There's going to be quarters where you look and go, digital growth wasn't that big. They lost a lot of people on the linear side. That's not so great. Other months it'll be, well, cord cutting wasn't so much. They grew a lot in digital. This isn't going to be clear because I think obviously a lot of people are going to sign up as they cut the cord, which tends to be a first quarter, fourth quarter kind of thing, as there's a show they want to watch. And that could be a big fight on ESPN Plus, gets them to say, well, if I was going to pay $60 for this on pay-per-view, I might as well just get 6 months of all three Disney Plus, Hulu, and ESPN Plus. Or it might be the launch of Falcon and Winter Soldier or season 2 of The Mandalorian or whatever it is. But Disney is managing for the long term. They're not managing for the quarterly result.
Well, and that's a good thing. I mean, as a former investment consultant, I love that long-term view, not just looking quarter to quarter that many analysts and stock pickers have. So I think that's good. Dan, something you alluded to on the podcast, I want to just bring to our tech segment here. Viacom CBS also launching a streaming service. It seems like everyone is getting into this game. I would argue, get your perspective, that we have too much content and not enough diversification.
We're oversaturated. I would like to see either CBS either add a lot of Viacom content to CBS All Access and keep the price point low, or partner with somebody. Like maybe if Comcast and CBS got together and they could offer CBS, NBC, all their cable channels, maybe that equals Netflix. Right now, I look at it as there's Netflix, there's Disney Plus. Disney Plus makes it very inexpensive to get Hulu. I have Sling TV for the house where we don't have cable. And while I have a lot of other things because it's my job, those are the ones I watch for, in my real life when it's not for work reasons. So for me to get another one on top of that, I start looking and saying, now I'm paying close to what I paid for cable. Why don't I just get cable back? Like it doesn't make any sense to have all of these services. So we're at a saturation point. There's going to be failures. I think there's going to be consolidation. I think there might be companies that look at it and say, geez, could we combine our assets and create sort of like another take on Hulu where it's a few companies team up and split the revenue and maybe own a new company together? But I don't think there's a path to success for 7 different $9.99 plus a month apps. It just doesn't make any sense to me.
And Dan, I mean, I've talked with Kevin Kelly from Delphi Digital about the wild west of cryptocurrency and blockchain. And I think that is the case when you're building a market. But is media, and you've got a better perspective than I do on this, is media the wild west? Are we back to this, everyone kind of survival of the fittest, trying to figure out how to make it work, and we're just going to have people throwing stuff at consumers, throwing stuff against the wall?
Yeah, we're in a transition period. Remember when music, like streaming, was kind of new and people were paying for downloads, and then it moved to an all-you-can-consume model, and we're still struggling a little bit with that model with how to pay artists. But for the most part, as consumers, we have accepted that we will pay $9.99 a month and be able to listen to any song ever. And we don't really want any restrictions on that, and there's 3 major different services that offer you that. I think there will be consolidation on the technology end in cable, in streaming television. And I don't know what that would look like. But I know right now with Sling TV, if you subscribe to HBO through Sling TV, your HBO content appears in the Sling interface. I don't know if it will be somebody making deals like that where whatever you subscribe to, you can get all in one interface, or if it's somebody finding a technology way, maybe Roku finds a way to make it very easy to stream between all these services or switch between them. But I know that when I watch TV on my Roku, I have a TV in Orlando that has it built in, that if I press the Netflix button, it's like 30 seconds for Netflix to come up. But I don't have the greatest internet there, so maybe it's faster elsewhere. But there is a changing period, and I'm used to flipping around channels or going, hey, I'm watching ESPN, but I'm flipping back to ABC because there's 2 games on at the same time that I want to see, and it's a button, as opposed to maybe now I have access to one of them on Sling TV, but I have access to one of them through a different service, maybe CBS All Access, maybe NFL Network, who knows. And that's a clumsy thing to do. So I do think we're going to see big innovation there, much like we're starting to see in the music space, where you can access podcasts in a lot of the same places where you access music.
Right.
And you can access all of that through your Amazon Echo or other digital assistant. So big change is coming here.
Yeah, definitely. Well, Dan, always great to see you. Thanks so much for sharing your insight on a wide variety of issues. And look forward to having you on the podcast later on in the week.
I'll see you later this week.
Folks, that wraps up this episode of BRN AM. Hope you found it educational and entertaining as well. Hey, have a financial topic or someone of interest that you think we should talk to? Drop us a line. And don't forget, for all the news in retirement markets, technology, personal finance, and so much more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving and don't forget, roll with the changes.
But if you're tired of the same